Hey everybody, hope you're doing well. March 24th, hard to believe. A year ago, the stock market bottomed. Hard to tell where we were going, but we wanted to talk to you about consistency and time in the market. We saw a really interesting tweet by Peter Mallouk, CEO of Creative Planning, which said that at age 20, the annual savings to become a millionaire by 65 with a 7% annualized return was $3,272. At 30, it jumps up to 8761. At 40, 14,776, and so on to your 60, you have to save $162,000 a year. We bring this up because most people don't understand that consistency, dollar cost averaging, avoiding the noise, understanding that there will be drawdowns within the market. We saw last year the fastest 30% drop in history. As we know, COVID was sweeping the nation. March 23rd of 2020 ended up being the ultimate lows. We talked about this in the blog and vlog a few weeks back. March 9th of 2009 was the ultimate lows there, but we weren't technically out of a recession until then. COVID cases, news has not dissipated, even though we are in a very optimistic time with the vaccines rolling out. We had the second wave in October. Some folks mentioned to us we're not going to invest again until COVID headlines disappeared. We have now witnessed over 100% return since the March 23rd bottom in small cap stocks, but also had this massive, massive drawdown. So we've talked about this time and time again. Come up with a financial plan and investment strategy that you can work with through drawdowns. The best companies in the world do suffer drawdowns. That doesn't mean that the core business is going away. We have some of the major tech companies in drawdowns right now. Apple way off their eyes, Tesla, as we know, some other big cap tech stocks. But the real important part of this is consistency, starting early, sticking to a plan. We have a lot of clients and prospects that come to us that don't even know how to get started. They talk about the markets being rigged. We've talked about Dave Portnoy talking about suits and this mindset of you can't get into the market. We encourage everyone here at Sherman Wealth to have access to the capital markets. That's why we've created what we have. Really want you to take a look at the interesting data of what it really takes to be successful over time. There are no get rich quick schemes. Consistency, dollar cost averaging, starting early, sticking to a plan that you can live with, understanding that there's going to be short-term losses. Also, an interesting tweet that we saw was that the percentage of time that the market's up over a year is 52%. 3 years increases by 10%. And then, of course, past performance is not indicative of future returns, but there's never been a time within 20 years in which the market has been down. So if you bought throughout all this, if you bought throughout COVID and didn't abandon your plan, didn't sell, didn't panic, stayed the course, potentially increased as you got in a raise. We've talked about this as it relates to lifestyle creep and other things. Anyway, some really interesting data that we wanted you guys to know about. Hope you enjoyed the video vlog format. Let us know what you think. If you have any questions about what to do to get started saving, every dollar does count. Not to be cliche, but a penny saved is a penny earned. Have a great day, and we will talk to you soon.